Welcome to the deep dive. Today we're really digging into something that's moving from theory to an immediate, almost urgent necessity for financial institutions.
That's right. We've been going through a lot of material on the future of banking in Nepal, and specifically this gap between basic digital tools and true autonomous intelligence.
Our mission today is pretty straightforward, but it's critical. We need to unpack what this shift really means.
And why just sticking with the current generation of AI, the chatbots we all know, is, as one source put it, a dead-end street.
We're talking about something called Agentic AI.
And this isn't just about what the IT department should be buying. It's about really competitive survival.
I think the core insight, the one thing that really stood out from all the material,
Yeah.
is that this is not an IT upgrade.
Not at all. It's a fundamental shift in the business model.
It's non-negotiable.
Huh.
And for banks, the biggest risk isn't that this new tech might fail.
No, the biggest risk is that while they're waiting, they become completely obsolete.
It's like trying to repaint a broken-down car instead of just building a new engine.
That's a great analogy. And to really get the scope of this, we have to draw a really clear line between what people think AI means in banking right now and what's actually coming.
Okay, so let's start there with something everyone knows, that familiar frustration.
Right.
If you've tried to do anything useful with a bank's chatbot, especially here, you know the loop.
Oh, I know it well.
A few pre-programmed answers, it totally misunderstands you, and then you get that final disappointing message.
Please wait while I connect you to a human agent.
Every single time. These things are just relics.
They are, because they're built on what's called generative AI, or, sometimes even older tech that's just pretending to be AI. The industry has to get past that, and fast.
So when people hear modern AI, they usually think ChatGPT. That's sort of the peak of generative AI. What's its actual limitation?
Gen AI is an incredibly powerful communication tool. I mean, it's a pattern matching machine that's digested just vast amounts of human knowledge.
Its whole job is to predict the next word, the next token.
Exactly. It's fantastic for summarizing a report or drafting a really nice email. It makes bots sound very, very articulate. It's a brilliant mimic.
So it can explain to me why a transaction on my account happened. It could even tell me how to start a transfer.
But that's the ceiling.
It can't actually do it.
Precisely. Its entire world is communication. It can talk about money, but it can't move money. It describes a process, but it can't execute it.
And that's the bridge we have to cross to get to Agentic AI.
Agentic AI is a completely different species. It's an autonomous system. You give it a goal,
Okay.
and it perceives its environment, it creates a multi-step plan, it picks the right tools, and it carries out the tasks to get to that goal, all without a human holding its hand.
It goes from being an advisor to an executor.
That's it.
So give us that loan application example. That
Yeah.
really made the difference click for me in the source material.
Okay, sure. So if you give a loan application to a really powerful generative AI, like a ChatGPT, it could write a beautiful, eloquent summary of the borrower's risk profile. It could highlight all the key details, maybe even draft a personalized acceptance letter.
But that's where it stops. It can only talk about the loan.
It's stuck in communication mode. The agentic model, on the other hand, takes that same application and initiates an autonomous workflow.
It goes from conversation to action.
Exactly. It connects to external systems. Here, that could be the CIBIL or NID APIs, the national credit and identity databases.
So it verifies the applicant on its own.
It does. Then it underwrites the risk based on the bank's rules. It approves the loan. And then this is the key part. It immediately and automatically tells the core banking system to disperse the funds in Nepali rupees.
So the big takeaway here is the agent doesn't just analyze, it acts. It makes the decision and completes the financial task. Okay, this is where we get into the nuts and bolts of how this is even possible. Because that jump from explanation to execution, it's all about the internal architecture.
It is. An agent isn't just a smarter piece of software. It's structured for autonomy. It has these dedicated modules that let it manage itself and, act.
And there are 4 critical ones that make this whole system revolutionary.
That's right.
The first is the objective module. This is the mission control, right? It has to be crystal clear.
Absolutely. It could be something like approve a qualified MPR 100,000 personal loan, or for a corporate client, maybe maximize overnight yield while keeping a certain liquidity buffer.
Then comes the planning module. And this is where it really separates itself from a simple chatbot.
This is crucial. A Gen AI can't hold a complex multi-step plan in its head. It's just always thinking about the next word.
But the planning module can map out the entire journey.
Yes, it takes that high-level objective and breaks it down. Step 1, verify identity with the national API. Step 2, analyze the bank statements. Step 3, calculate debt to income. Step 4, transfer the funds.
And the third piece, which the source material really hammers home as the game changer, is the tool use module.
This is where the autonomy really comes alive. It's the agent's ability to interact with the world outside itself.
Through APIs?
Through APIs, yeah. Application programming interfaces, they're like secure digital handshakes with other systems. This module lets the agent call the core banking system, query the credit bureau, pull in market data.
So without this module, the agent is smart. With it, it's powerful.
That's the perfect way to say it.
But hold on, if we're giving an autonomous agent the keys to the kingdom, letting it talk to the core banking system, disperse money, isn't that incredibly risky?
Yeah.
Where's the human oversight?
That is exactly the right question to be asking. And it's why the fourth module is absolutely non-negotiable, the self-correction module.
The safety valve.
It's the safety valve and the resilience engine, all in one. If the agent hits a roadblock, say the credit bureau's API is down or a debt ratio is borderline.
It doesn't just freeze and hand it off to a human.
No, that's the old way. It adjusts the plan. It might flag the verification issue, but try an alternative data source to keep the process moving, all within pre-approved guardrails.
So this architecture changes the entire risk calculation.
It does. You move from depending on perfect human decisions to a resilient, optimized process.
And this difference in architecture completely changes the economics of it all. The ROI.
It's a total transformation.
We're going from what incremental benefits to something exponential.
Absolutely. With chatbots, your ROI is incremental. You save a few hundred rupees per customer call. That's it. Agentic AI is exponential because it changes the bank's ability to actually create value.
So instead of just saving a little money, the bank is generating thousands in new, profitable business.
Right. By being the first to approve a loan or by perfectly managing a corporate's cash flow.
So if generative AI is the brilliant intern who writes an amazing draft report,
Agentic AI is the department head who not only commissions the report, but reads it, gets the budget, executes the whole project, and changes course on their own when things go wrong.
it's a total paradigm shift in output and responsibility.
And this is so important for a place like Nepal because this technology seems almost custom built to solve some of the most stubborn structural challenges in the financial system here.
Let's get into that. The source material highlights 3 key areas. Let's start with financial inclusion, MSME, and agricultural credit.
Right, micro, small, and medium enterprises. They're the backbone of the economy, but they really struggle to get capital, especially outside the main cities.
The current system is slow, it's paper-based, it's biased toward urban centers.
Exactly. Think about a farmer in Jimla who needs a small loan for the season. The traditional way means travel, tons of paperwork, huge overhead for the bank, and then weeks of waiting.
Which makes that small loan basically unprofitable for the bank to even process.
It's economically non-viable. So what does the agentic solution look like? It's rapid, data-driven underwriting that just removes geography and paperwork from the equation.
How does it do that?
The agent connects to all these different data sources instantly. It can pull transaction histories from digital wallets like Isawa or Kulti to see real-time cash flow. It can verify land ownership through government APIs. It can even cross-reference that with market price data for the farmer's crops or, local weather patterns.
And by pulling all that data together in seconds, it can create a really precise risk score and disperse the money in minutes.
And that's the power. It turns a high-cost, multi-week human process into a nearly zero-cost automated one. This is how you actually achieve financial inclusion for people who were previously too expensive to serve.
Okay, second major area, and this is huge for the whole national economy. Remittance security.
With remittances making up nearly a quarter of GDP, fraud is a massive, corrosive threat.
And the old systems just aren't cutting it.
Not at all. The old rule-based systems are slow. They create tons of false alarms, which then require a human to manually check everything, slowing down legitimate transfers.
So the agentic approach is different.
The agent builds these incredibly detailed, nuanced behavioral profiles for every single person sending and receiving money.
So when something unusual happens, it doesn't just raise a flag for someone to look at later. It acts in the moment.
Exactly. Let's take that example of a worker in Doha. Let's say he always sends NPR 40,000 to his mother.
Right, a very clear pattern.
A clear pattern. Then one day, he suddenly tries to send NPR 250,000 to a brand new person in a different city. The agent sees that high-risk deviation instantly and triggers a proactive, real-time intervention.
And what does that intervention actually look like?
It's a multi-channel verification. It might trigger an automated voice call to the sender's phone asking a simple security question. At the same time, it sends a Viber or WhatsApp message to the recipient. Are you expecting NPR 250,000? Reply Y or N.
And all of this happens in, what, a minute or two?
Maybe 90 seconds tops.
Mm.
If it gets confirmation, the transfer goes through. If not, the transaction's frozen, and a human fraud analyst gets an alert with a complete, summarized case file.
You're moving from reactive damage control to real-time prevention.
It's a total game changer for security.
That's a massive upgrade.
Yeah.
Okay, third area, capital efficiency. This is more about the bank's core engine, its corporate clients.
Right. This is about managing liquidity for large companies. Their treasury managers have strict rules, like, always keep X amount for payroll, but invest any excess.
And a human might review that once a week.
If that.
Okay.
Which is a huge missed opportunity. An agent monitors those rules every single second.
So the rule is maintain a minimum of NPR 5 million. The second a big payment comes in and the balance goes over that.
The agent's objective and tool use modules kick in. It automatically sweeps the excess cash into a pre-approved high-yield investment. And conversely, if it sees a big debit scheduled for the next day, it liquidates just enough to cover it, right on time.
So this becomes a sticky service. It locks in those valuable corporate clients because you're guaranteeing them perfect liquidity management.
It does. But all of these transformative applications, they run straight into the regulator's legitimate fears.
The Nepal Rashtra Bank, the NRB, they're understandably cautious.
And the fears are real. A bug in an agent could cause chaos. A bad underwriting model could create a huge portfolio of bad debt overnight.
So the traditional regulatory move is to issue these big, comprehensive directives, which just causes stagnation because the tech moves too fast.
But the material we reviewed makes a critical point, that traditional caution is now the high-risk strategy.
Inaction is the high-risk play.
Exactly, because while Nepali banks are waiting for perfect regulations, international fintechs in places like Singapore or Dubai are already using these agents.
And they can start offering cheaper, faster, more secure services that just bypass the domestic banking system entirely.
They'll start to hollow out the most profitable parts of the local industry. The competitive clock is ticking, and it's external.
So the solution isn't to just throw the doors open. It's strategic. It's controlled experimentation.
Which brings us to the regulatory sandbox.
Let's be really clear what a sandbox is. It's not a free-for-all.
Absolutely not. Think of it as a secure, supervised flight simulator for financial policy. The NRB is still the pilot. They just agree to let banks and their fintech partners test these new agentic AI products on a limited, very defined scale.
So the NRB sets the boundaries. They'll say, okay, you can test this agent, but only with 5,000 customers.
Or the maximum loan the agent can approve is NPR 200,000, and they require mandatory, transparent reporting on everything.
And the benefit here is that the NRB gets real-world data.
Invaluable data. They see actual default rates, decision accuracy, system resilience. It moves the conversation away from these philosophical fears about what if to data-driven assessments of actual performance.
It lets them craft smart, tailored regulations for this new tech instead of trying to jam it into old, outdated rules.
It transforms the NRB from a cautious gatekeeper into an informed architect. And this model has worked. India's Reserve Bank used sandboxes to build their entire world-class digital payments ecosystem.
So for Nepal, a dedicated AI sandbox is the most strategic path forward.
It's the path to both stability and innovation.
Looking ahead, the sources suggest the next 18 to 24 months are really the defining period. They lay out two very different scenarios.
They do. The first is proactive adoption. In this future, the forward-thinking banks lobby for the sandbox. They partner with fintechs, they test their agents, and they come out with battle-tested products.
Lungs in minutes, best-in-class fraud detection. They capture the high-growth markets.
And then there's the other path, strategic hesitation. Banks just opt for superficial upgrades. A slightly nicer app, a chatbot that's a bit more articulate.
But they avoid the deep, fundamental re-engineering that agents require.
And because the banks aren't pushing for it, the NRB delays the sandbox framework. That creates a vacuum.
which gets filled immediately by outside players.
Overseas fintechs who don't have legacy systems holding them back launch superior remittance and SME lending products. And the domestic banks find themselves left competing on just basic low-margin deposit services, a race to the bottom.
So what's the hard truth for financial leaders here?
The hard truth is that agentic AI is real, it is here, and it is being deployed globally right now. This is not theory anymore.
And this has to reach the boardroom.
It has to. The deployment of autonomous agents is not an IT project. It is a fundamental re-architecting of the entire business model. It changes how you get customers, how you underwrite risk, how you create value.
And the banks that just keep tinkering with chatbots.
They're positioning themselves to become historical footnotes very quickly.
That is the competitive clock.
Yeah.
The shift from generative to agentic AI is the new benchmark. The pressure to move beyond just talking and into autonomous execution. That's the single biggest strategic choice facing the industry.
It is.
We've seen that the real competitive edge comes from autonomous execution. So as you think about this deep dive and you think about your own industry, don't just ask, what can an AI explain better? Ask yourself this. What critical multi-million-dollar action could I safely delegate to a goal-oriented autonomous agent today? That's the question that defines the next generation of business. We appreciate you diving deep with us.